Hey guys, it's Kieran. I'm just going to do a quick market update. And before I do that, let's address the topic on everyone's mind. So most people have heard of this SEC and this Binance FUD and regulations. And so is it really FUD? What is going on really? And so far, as we've known that the SEC have filed a lot of charges against Binance, which is one of the world's largest exchanges. But various claims of fraud, and the ultimate thing is, what's going to happen? Is this a case of boy who cried wolf? Every time there's, especially in bear markets, there's always allegations against Binance. And the question is, are we kind of desensitized against this, or is this actually something real? Is this something different? Of course, we just have to see how this really pans out. And there's also SEC allegations against Coinbase as well for potential different kind of allegations, but potentially against the listing of unregistered securities in, for example, token offerings, etc., etc. And so we'll just have to see this whole thing really spans out, really. Ultimately, I feel that crypto is here to stay, and ultimately, once we get this regulatory framework sorted and all the dodgy dealings and the bad actors flushed out, hopefully the space will grow. We can see that we had this pretty much as head and shoulder for a long time. So here, shoulder, head, and head here. And the actual technical target of this move was roughly to 22.5. I still think that's possible, but as of right now, the head and shoulder has slightly been distorted, and some would argue it's not valid anymore. There does seem to be certain others patterns at play here as well. And right now, anything could happen, and we've gone back into this range that we broke out of. And I explained there's two situations. We could just push back down here to that technical target of 24.8, potentially as low as 22.5. Because we had that key weekly imbalance as well. So you can see here in this Bitcoin chart, as you can see, this weekly green long candle with mostly body, there's a huge imbalance here between this wick here and wick here. There's a huge gap that hasn't been filled. And so that potentially does get filled in the next couple of weeks. But the thing is, now that the head and shoulder pattern has just been distorted and we've gone back in this range, and I also spoke about on Monday as well in a stream how I expected that if we had gone back into this range, which we actually did get back above in this range, I actually expected a tap of this point of control, this untapped point of control. These boxes are essentially showing the distribution of volume each individual day of price action, and this was a very high volume node here, which was from this we had this quick breakdown here, and this point of control was untapped, and so naturally once we got back into the range like this is eventually got tapped like a magnet, and I posted that in the group chat and we got that, which is nice. And for a while, I haven't actually been trading Bitcoin. The last couple of weeks, I've mostly been trading gold, some nice setups in the 1 minute chart of gold. But now the price action is becoming more and more interesting. Of course, there's now a chance that the longer we linger in that zone here, it just decreases the likelihood of a breakdown. There does seem to be somewhat of a channel forming. So if we do something like this, potential touch points here, and if we do get some kind of measured move of the channel, that, potentially there's a move to this 31.4k region as a measured move. That is something considering as well. It all depends on how seriously you take trend lines and channels, right? But it's definitely a possibility if we break out of it. In terms of key levels for me, there's certain key monthly levels to really be aware of. So first of all, this key monthly level, I've put an alert here as well for potential reaction. So this 23.1k region, this was a key monthly level. We bounced off it so many times. And of course, this orange line here, orangey yellow line here, this was the monthly open last month, and 29.2, and that does correspond with the CME gap, so that's something I'm watching. In terms of the weekly chart, we have this 22.2k weekly, and I spoke about this imbalance here as well, that kind of coincides with that. And of course, this weekly open here as well. So 30.3, and so these are the most levels that I'm mostly watching in terms of weekly reactions. And in terms of daily chart, there's not been too interesting levels really. It's, of course we had this tweezer, somewhat of a tweezer top at bottom here, and then we bounced back up, and so it's still range bound, it seems, until further notice. And this is what I was saying. I'm a bit surprised that, because naturally as you keep banging on a floor or a ceiling like this, keep banging back, eventually the ceiling or floor does break, but in some ways, we've gone back into the range, and the range is still the range until it's broken. It's just that cliche. I'm also just going to look at certain key Fibonacci's as well. So drawing this Fibonacci from the low of this year to top here, we're still holding this 382 Fibonacci, 25.1. We're still above that, which is good. Breakdown below that, then is a likelihood of move back down to the 0.5. If I draw Fibonacci also from this low here, so from this 9th of March key level, the 382 Fibonacci is 26.6. So we actually broke down below. Now we're back above it. And so it seems now we're both back above the 382 Fibonacci here. And naturally this other one as well. And so, perhaps we do get another bounce, but it's still range bound as well. Going back into the range, also, you also have to consider that moves down never happen in a straight line as well. Now, looking at this, if you're going to draw some trend lines as well, just for some context, so draw a trend line, for example, like this, perhaps we do get that final touch point here as well. That's definitely possible. And let's look at, this is still range bound in many different ways, not just that other channel. Also, it is range bound in this way as well. If you draw like a parallel channel like this, touch point here, potential touch point like this, perhaps there might be another push up like this, could be another fake out like that, that's possible as well, and then we get the push back down here, and that will, I'm putting alerts here because this will be the support of this channel, but also the trend line here, and so perhaps that could be a potential long setup, and you can kind of open a long position and take it up to here probably, nice long trade, and so a lot of patience is required. A lot of the time what happens is that the market gets very quiet, and this recent couple of days price action has actually been the highest amount of volatility for the last couple of weeks pretty much, and a lot of the time when it's not volatile, you can really sucker you into taking unnecessary trades, ultimately getting chopped up. And so a lot of patience is required for these setups to play out. Also, taking a quick look at the long to short ratio. Essentially, the long to short ratio is looking at which proportion of the market is net long. And generally, the market moves to disappoint the masses. And so as we can see here, this is the long short ratio of Binance traders and general more retail who are generally weaker traders. And the market generally moves to make them lose. And so in this recent dump here from 5th of June here, we can see a lot of it is fueled by the retail going long, and also on top of the open interest, which is the opening of positions, and this was also opening as well, increasing. And so we can see that this ultimately fueled the drop. We actually reached crazy absurd levels like 0.73. What's more important is the trend and the actual value. But then recently there's been a huge dump in this. So on the 6th of June, this was naturally a huge dump from 0.74 to 0.59, and the long short and the actual open interest decreased as well. So it seems that a lot of particularly shorts were squeezed out, and we saw this recent run up. And so whilst this trend has been down, we are still 0.59 net long. So hopefully to get that further run up, you'd hope to see a bit more of a decrease in this open interest as well. But this has gone down. We can also see that the top traders were mostly closing their long positions, so that they were becoming more and more net short. But now there's been a recent spike, and so now they seem to have opened some long positions. And so it's interesting how this will unfold, and so much changes on a day-to-day basis for day trading. Looking at the Ethereum chart, Ethereum has actually, the last couple of days, done a bit better than Bitcoin in some sense. So in terms of key monthly levels, we are still below that monthly open, so 1872, and the key weekly open, this was a key weekly level, 79.8, was still above that, and we actually took so many wicks of that as well, which is interesting. It's interesting how you can draw a weekly level like this, and even when you go in the 1 hour, there's so many wicks of it like this. It just shows how technical analysis can work quite well. And so far now we've actually regained this monthly level, but now we fell below it. And so we'll have to really see if ETH does at least hold this monthly level, because perhaps then that could hold a setup again for the run up potentially to this 19k level as well. And another thing I want to also mention is the ETH to Bitcoin dominance as well, because this does give certain clues speaking about it. So looking at this chart we spoke about on Monday as well, this is a sloping trend line, so ETH Bitcoin dominance. Essentially, you want a certain, sometimes it's more lucrative trade to trade one asset more than the other, because it's about gaining Satoshi, right? And so if you draw this, we can see a trend line from this touch point. So we've had almost 4 touch points, second, third. This one's slightly front ran it, but now we've gone above it like this. And so overall, Ethereum trades has been a bit more lucrative in some sense. The question is this a fake out and then going back into the range, or do we at least tag this high here? We have slightly front run it, but it's close enough. And then perhaps we at least get another touch of this order block here and then come back down. So that's something also to consider. But this is an area is a key resistance for the ETH to Bitcoin dominance as well to consider. The total crypto market cap is still 1.07, not 1.08 trillion range. We'll have to see how this evolves as well. And this, of course, here was a key resistance, 1.18 trillion. In terms of Bitcoin dominance chart, we're still range bound for that pretty much the last 2-3 years in this range. I do expect a tag of this order block here, so this is key resistance. So many imbalances left as we dumped here, and so this range between 50 to 52%. I do expect it to get tagged in the next couple of months. Looking more actually, of course, at the wider markets as well. This is a setup that I've planned out. Haven't actually entered yet, but this is the SPX. In the recent last couple of days, it has had a nice run up, It actually has been outperforming overall much better than Bitcoin, to be honest, the last couple of weeks. But now, once we are heading towards this key weekly 4.3k level, if we do get a false breakout like this and come back into the range, I might actually scale into a short setup, and I would target it. It'll take a couple of months to play out. Maybe this level here, first take profit around here. If you go in this chart as well, what do you notice in the SPX is that this is a key trend line from going way back. So first touch point, second touch point, third touch point, we flipped above it. Sometimes what happens is that you do get a fake out like this, and it goes back down into the range, because this is like a compression somewhat. And so we'll have to also see how this folds. The main questions now is SPX now reaching some sort of local resistance? And could that, perhaps this final push up here, could that potentially mark a final push up for Bitcoin and then potential further dump? Just getting the last amount of liquidity in. So that's just something else I'm watching as well. Also looking at the Dixie. Dixie has reached my target, so 104.8 level as well. And I do potentially expect this weekly level to be tagged. And of course, nothing goes in a straight line. We have to also watch how this unfolds as well. Then the VIX. I spoke about this earlier as well. The VIX has actually reached a really huge level of support now. The VIX, for those who don't know, has generally an inverse correlation to risk on assets and SPX. So very often when the VIX goes down, the SPX bounces, and when the VIX goes up, the SPX pretty much dumps. And generally speaking, there's an inverse correlation, the conventional wisdom. Perhaps we do get that final move to this area here from January 2020, but the VIX is actually almost at a really, really key support. And the question is, do we get that final bounce? And does that kind of correlate with a dump or decline for certain risk-on assets and SPXs? So that's just something we have to consider as well. Gold also, probably we do get that final push up. This is the key kind of resistances from 2020, 2022, and this one here. So perhaps we do get that final push up. I would perhaps expect around 2.1, 2.2k at least. And then once that happened, maybe that could be the local top and then go back into the range. And this 92 to 23k level is a key point of control of this whole range, but it's also 2011 peak as well. And so we'll just have to see how this whole thing evolves as well. Apart from some certain unemployment number news this Thursday, there's not actually a whole lot in terms of news this week. Now, of course, this main thing is this SEC Binance news as well, and we'll see how this evolves. And hopefully, once this garbage and once the fraudulent aspects of the space in crypto is flushed out, and once we get a little bit more regulation, hopefully this space will really bloom. Well, guys, thanks a lot for watching. Do check out my YouTube channel. This is where I post my market updates, my passion for crypto, and really tips to really fast track your investing and trading career.